Hey there, my name's Curtis Lucas and you're watching Empire Building. So after my last video, I received a lot of reaction down in the comments. And many pointed out that I did make some mistakes in my assessment in what I reported based on the information that I was able to gather. Now, I made a point at stating in the past that I am human and I am prone to make mistakes. This is why I'm constantly urging everyone that they must do their own research. Blindly following anybody, no matter how trustworthy you perceive them to be, is not a wise decision because you're not taking responsibility for your decisions. The information and my actions that I'm sharing with you are my decisions based on my research and also based on my own understanding and my assumption of risk. My risk profile is not going to be the same as yours because my perception of risk won't be the same as yours. So you have to be able to understand this information for yourself and make your own decision based on that understanding. But I did say that if I made a mistake, I would be sure to correct it. So here we are. I wrongly stated that the revenue for SOS during the year of 2019, as reported in their filing with the SEC, was only $37,655. I made this error because it was in fact an error in their own reporting. They forgot to include the phrase "in thousands" at the top of that table. So people can get mad at me for misreporting that when it was the company themselves who misreported it in the first place. And they didn't just make this mistake in that filing, they did it in every previous year going back to 2017, at least in the filings that they had listed on their own website. So yes, indeed, the company itself is a lot larger than I had originally perceived. Generating a revenue of $37.6 million in 1 year, it certainly makes it a whole lot larger than all the other North American mining competitors. However, knowing this, we must also look at the other side of the cash flow statement. And so now with this knowledge, we go from perceiving a company that was too small to be really all that significant to actually quite large. And their legacy business plays a pretty big role in its future profitability. Because along with that $37.6 million in revenue, they had a significant amount of expenses, which led to an overall net loss of $9.9 million in the year 2019. And as you go through the company's history, you can see year over year, they've suffered significant losses over a prolonged period of time. These sustained losses are going to have an impact on their performance going forward. If there's any doubt that these losses actually, in fact, will continue, you only need to look at the last quarterly statement that they published as of June 30th, 2020. In the first 6 months of 2020, they had already lost $8.7 million. And there have been no filings since then, so we have really no idea what's been happening since then. Another mistake of mine was that I stated I could not locate the website of their seller, the company selling them the Bitcoin mining machines that they had purchased. HY International Group New York, Inc. I'm not sure how I missed this, but somehow I did. Maybe I spent a little bit too much time late at night researching this company, went a little cross-eyed. But the website does in fact exist. However, when you go to this website, you'll notice that it's an unsecure website with no ability to take orders of any kind. It's basically just a landing page with some information and an email and a phone contact. It's not exactly the most efficient way to run the world's largest cryptocurrency mining machine matchmaker, as they claim on their website. Looking a little further into their company profile, we can see that HY International Group New York, Inc. sells second-hand and assembly crypto mining rigs for BTC, ETH, etc. Second-hand mining rigs could be able to explain how they were able to acquire such a large quantity in such a short period of time. This, as it turns out, is exactly the same thing that Bit Digital did. All the miners that they acquired to grow their fleet so large so quickly were secondhand. And there's no telling how old these miners are. Now, in the case of SOS Limited, we don't know if in fact they were secondhand. They do say on the website secondhand and assembly. I assume assembly means new products. But without the purchasing agreement, which they have decided not to file, we can't verify this. This is a risk. Everything that I've been stating about this company is merely to highlight the risks that many people aren't paying attention to. I'm not making a case that this is fraud. I'm not making a case as a short seller or someone who's got puts. I got a lot of comments like that down below. The reason why I don't have any position against this company is, one, that's not how I invest. And two, I'm not an idiot. Investing against any of these companies would just be foolhardy. And I've said it many times before, you'd only be asking for pain. Everything about my investment strategy is all about managing risk. I'm already tethered to a very volatile market. I'm not looking to add to that risk. At least Bitcoin and Bitcoin mining is something that I understand quite well. But if I'm unable to verify the information that the company is stating, I'm not comfortable with that level of risk. And as I mentioned, researching information on this company is exceedingly difficult. Their reports, their articles, their press releases are all rife with inaccuracies, grammar errors, misreporting units, poor sentence structure, spelling mistakes, and most of this, if not all of it, is probably due to the fact that it's all written in Mandarin. At least I think it's Mandarin. And when your browser translates that article, there's always information lost in translation.
あまり良い話ありませんね。
Your ass is happy?
No. He said, your assignment is an unhappy one.
Oh,
Why don't I just speak in English?
that would be a good idea now, wouldn't it? That way I wouldn't misread the subtitles, making it seem like you're saying things that are dirty.
This, I imagine, is why it was so difficult for me to verify the location and or existence of the hydroelectric dam that they had referenced in the article regarding their agreement that they signed with the electricity provider, which also cannot be verified. I find it hard to believe that a corporate entity that owns and operates a large hydroelectric dam would be unsearchable. But again, that may be simply due to a spelling error. It doesn't mean that there's something shady going on there. I, in fact, believe that everything that they've reported is accurate. That press release also stated that the rate for their power was 22 cents to 38 cents kilowatt per hour. Here again, this is another mistake. What they're trying to say here is dollars per kilowatt hour. That's the unit of measurement used when trying to figure out what your cost is for power consumption. It's also pretty clear that this is still reported in Chinese currency, which they also did not state. But when you convert that to US currency, that puts it between 3.16 and 5.45 cents per kilowatt hour. So not exactly bad, but certainly not the best out there. But the bottom line is, I believe they are receiving these miners. They may or may not be used. And when they are all deployed, they should be able to generate approximately $206,000 per day worth of cryptocurrencies. In fact, it's probably a little more since that was published. But nonetheless, that translates to $75 million annually. But as they stated, they're only beginning to receive these miners and will be deploying them over the next 3 months. So it'll be sometime in Q2 by the time they're fully deployed. As of right now, the company has no exposure to Bitcoin. So it's going to take them some time to be able to build up their own stockpile, something the other miners have been doing already for quite some time. But as I mentioned before, my main concern stems with their legacy business. As I mentioned, this is a company that's been losing a lot of money year over year and has shown no signs of turning that around. On page 97 of their 2019 annual report, they had this to say: Our financial statements are prepared on the basis that we will continue as a going concern. We have suffered substantial losses from operations in previous years, have a working capital deficiency, and have stated that substantial doubt exists about our ability to continue as a going concern. So it seems that even the company itself, at the end of 2019, just 1 year ago, had substantial doubt that the company would be able to survive much longer. But then, lo and behold, they saw what was happening in the cryptocurrency mining space. They pivoted. It was late, but they found a way to acquire enough miners to attract enough attention to themselves. This raised their share value, allowing them to perform multiple capital raises by issuing additional shares and warrants to purchase additional shares. Now, as I said before, it's fair that nearly all of the other cryptocurrency mining companies have all issued shares to raise funds to enter into this cryptocurrency mining space. However, the business models that they were coming from were significantly smaller and didn't really have an adverse effect on the company's performance moving forward. They had essentially been closed up completely, and the company didn't carry with it any future liabilities relating to their former business. In their most recent filing, the company stated that their current existing liabilities totaled $70 million. So while this company may not have debt, it does possess a significant amount of outstanding liabilities from its former operations. But with the massive amounts of money that they have been able to raise since announcing they're entering the Bitcoin mining space, they should be able to handle that. But it was the new shareholders that entered the space that bailed them out. So at least their ability to continue as a going concern actually may have been solved, at least for the time being. But this brings me to my next point, and this is the most important part. When I took a look into the company's history, I found that it was actually founded in Delaware. But in 2015, the company moved its corporation headquarters to the Cayman Islands. Actions such as this never really sit quite well with me. And they even lay this out in their risk factors. You may face difficulties in protecting your interests, and your ability to protect your rights through U.S. courts may be limited because we are registered under Cayman Islands law. We are an exempted company limited by shares registered under the laws of the Cayman Islands. Our corporate affairs are governed by our memorandum and articles of association, the company's law of the Cayman Islands and the common law of the Cayman Islands. The rights of shareholders to take action against the directors, actions by minority shareholders, and fiduciary duties of our directors to us under Cayman Islands law are to a large extent governed by the common law of the Cayman Islands. The common law of the Cayman Islands is derived in part from comparatively limited judicial precedent in the Cayman Islands, as well as from the common law of England. The decisions of whose courts are of persuasive authority but are not binding on the court in the Cayman Islands. The rights of our shareholders and fiduciary duties of our directors under Cayman Islands law are not as clearly established as they would be under statutes of judicial precedent in some jurisdictions in the United States. In particular, the Cayman Islands has a less developed body of securities laws than the United States. Some U.S. states, such as Delaware, have more fully developed judicial interpreted bodies of corporate law than the Cayman Islands. In addition, Cayman Islands companies may not have standing to initiate a shareholder derivative action in a federal court of the United States. So that may explain why they chose to relocate their offices from Delaware to the Cayman Islands. Investors have no recourse. And in the next section, they even lay that out point blank. Certain judgments obtained against us by our shareholders may not be enforceable. We are a Cayman Islands company, and substantially all of our assets are located outside of the United States. Substantially all of our current operations are conducted in China. As a result, it may be difficult or impossible for you to bring an action against us in the United States in the event that you believe your rights have been infringed under the U.S. federal securities laws or otherwise. Even if you are successful in bringing an action of this kind, the laws of the Cayman Islands and of China may render you unable to enforce a judgment against our assets. So I've said it many times. Manage risk. If this sounds like the kind of risk you are comfortable with, then by all means invest in this company. I understand the appeal. It's an earlier startup company, and the perception is if you missed out on a lot of these other blockchain companies that soared, this feels like a second chance. And for those who jump on it early enough, it really is, as it clearly has demonstrated so. But if you think that you're able to hold this company with the same level of risk exposure as you would a North American mining company, I'm afraid that just is not so. That doesn't mean that what the company is doing is necessarily sketchy, but they've clearly set themselves up to make any recourse on your part impossible. Make sure you're accounting for that in your risk assessment. And for God's sakes, anyone who thinks that any of this is enough to go on to go and bet against this company, I would strongly advise against that. It is just not worth losing your shirt just to make a point. My only objective here is to encourage people to look a little deeper. This is why, in fact, I was more than happy to engage with critics in the comments down below from the last video. I spent a great deal of time over the last week reassessing and trying to figure out as much about this company as I could. Far more than I ever expected I would have to. For me, it's more or less a decision of yes or no. Once I see enough red flags, I know enough to say no and walk away. I don't need to build a case against a company. That's not what I'm here for. My objective is to determine whether or not I should put my money on the line. And for that, I don't have to prove a company is fraudulent. I only have to be able to prove whether or not their risk exposure is suitable for me personally. That's all for this one. Now let's get back to empire building.